Hello and welcome. Thank you for joining us. This is Business Incorporated coming to you live from Lagos. I'm Chimize Obi Iwago. On the program today, Nigeria and Libya remain exempted from current cutback agreement among OPEC and non-OPEC producers. The Organization for Economic Cooperation and Development says South Africa needs bold structural reforms to boost the ailing economy. Plus, Tanzania's president threatens to close down all gold mines in the country if mining companies delay talks with his government aimed at resolving allegations of tax evasion. We get started now with the markets, and here in Nigeria, the Nigerian stock market started the new week on a positive ground, continuing the rally which started 2 weeks ago. Nigerian Central Bank begins its July Monetary Policy Committee meeting today, and analysts expect the financial regulator to maintain status quo on key interest rate parameters. The numbers there showing that just South Africa's markets, the JSE index, looking up 0.48% at intraday, and Egypt's market was also 0.06% up. Kenya closed on a positive note, 0.64% on Friday. In the Middle East, banks pulled Qatar's stock market higher, while Saudi Arabia's market edged down after a string of second quarter earnings, with telecommunications firm Mobily plunging on a bigger than expected loss. Qatar index was up 0.84% at intraday. Dubai's index edged up 0.08%. Saudi Arabia's index lost 0.19%, with National Commercial Bank, the kingdom's largest lender, falling 1.2% after reporting a 0.9% fall in second quarter net profit. Etihad Etisalat Mobily plunged 7.4% in unusually heavy trade after posting a quarterly net loss of 189.7 million reals. Analysts had on average forecast a loss of 166 million reals. Abu Dhabi was up 0.12%. And in Europe, bourses there were lower in early trade as auto stocks slumped amid allegations of collusion. And the Eurozone PMI is also out. Let's bring in my colleague in Frankfurt, Ulrich Bartz, to chew all of these for us. Hello, Ulrich. Thank you very much for joining us.
Hi.
Well, the Eurozone economy slowed down in July. That's according to the manufacturing data released early today. Does the data support ECB's easing outlook and inflation position in the short to medium term?
I think not in the medium term, but in the short term it does, because at the last meeting, or after the last meeting, ECB President Mario Draghi said nothing about slowly easing back on quantitative easing on buying up of sovereign bonds of Eurozone countries. People had expected that, but he may have an argument when you look at today's numbers of the Purchasing Managers Index going down slightly, and you could say, yes, he was right, because the Eurozone economy is still not quite as stable as one would want, yet at a rating of, or at a number of 55.8, it is clearly above the 50 mark. That is clearly in an expansionary mode. Now I've got that out. Difficult word for me today. And expansionary mode, that means for the medium term that at some point the ECB will have to ease back on bond buying and return back to normal, because a lot of economists are already pointing out that today, when you look at the labor market, when you look at growth rates, when you look at a company performance, the Eurozone is getting back on track fast. And a country like Germany, of course, is doing very well. And the present monetary policy is not at all suited to conditions for a country like Germany at the present.
Well, Ulrich, it's interesting to see that your market there seemed to be doing all right at this time as against how it started. We could see the DAX already up at this time in the morning. We saw that the market was actually tilting down. And of course, the auto sector was under pressure. That was after the reports that the European Commission is investigating possible collusion between German car makers. Now, what new developments are we learning today, and how would it hit the sector?
Yeah, I think we're learning quite a bit, and it shows the breadth, the complexity of this case. Just now, it became clear that Volkswagen is planning an extraordinary, that is an out-of-schedule meeting this Wednesday of the supervisory board, and the supervisors who represent shareholders and the workers of the company will want to look into what is true about the allegations, asking the top management, and if so, how could that happen, and what to do about it. And it will be a very interesting Wednesday here indeed, because usually when these supervisory boards meet and they come to some sort of conclusion, a decision, or learn something that one didn't know before and that is relevant to the share, then they have to put out a special message, ad hoc message is what that's called, and I think people will be looking at that. BMW saying now they had no role in colluding on diesel cheating. All their cars were legal. Daimler saying 2011, or it said that Daimler only colluded on the antitrust issues until 2011. And at Volkswagen Group, well, the head of the Workers' Council at Porsche, a part of the Volkswagen Group today, saying that no, it's not us, it's you at Audi who gave us those bad engines. So the nerves are raw in the industry. There's a lot happening, and this is just the beginning.
It's really a pity. Anyway, we'll sure keep our eyes on that investigation there. Now, the European Commission's President Jean-Claude Juncker has warned that there will be retaliations against the U.S. if America pushes sanctions affecting European companies. Now, what retaliatory actions are likely to be taken by Brussels?
We don't have many details on that yet, but there are three possible paths that they can take. Perhaps they will take all of them at one time or another. I think the least combative is saying, please, United States, look at actions that protect our interests, or at least don't hurt the EU interests. A second retaliatory measure, or a real retaliatory measure, could be to apply World Trade Organization rules to anything that the U.S. tries to push across to EU companies, to the EU